Welcome to your daily stock market summary from MarketSnap. Hey everyone, it's great to have you back for another deep dive into the latest market action. Today, we've got a lot to unpack with some significant moves across the board, mixed signals on AI-driven sectors, and key earnings reports that could shape the near future. So let's jump right in and see what's driving the markets on this busy day in February 2026. First up, let's talk about the major indexes. And it's not the prettiest picture out there. The S&P 500 took a notable hit, sliding over 1.5%, while the Nasdaq dropped even more with a decline of around 2%. The Dow Jones wasn't spared either, shedding over 600 points, and the Russell 2000 also saw a dip of about 2%. Volatility spiked as well, with the VIX jumping nearly 18%, signaling some serious investor nerves. Clearly, the market is feeling the pressure today, and we'll dig into why that might be as we go along. On the brighter side, there were some standout performers among large-cap stocks. Equinix led the charge with an impressive double-digit gain, likely fueled by strong data center demand. Howmet Aerospace also caught attention with a solid uptick, boosted by a stellar earnings report showing robust aerospace demand. Seagate Technology and Motorola Solutions were other names posting strong gains, showing resilience in their respective sectors despite the broader market downturn. For long-term investors, these names might be worth a closer look as they're showing strength in a tough environment. However, not everyone escaped the red. On the losing end, Cisco Systems took a massive hit, plunging over 12% after earnings, despite beating revenue expectations. Investors seem spooked by conservative guidance and rising costs tied to AI hardware. AppLovin also saw a steep drop of nearly 20%, reflecting broader tech sector jitters. Shopify and Spotify weren't far behind, each losing significant ground. These declines highlight the short-term volatility in tech, but for us long-term folks, they could signal potential buying opportunities if fundamentals hold up. Looking at the market movers, the usual suspects like Nvidia, Apple, and Amazon were among the most active, though they faced downward pressure today, with declines ranging from 1.5% to 5%. Tesla also saw heavy trading volume with a drop of over 2%, reflecting ongoing concerns in the EV space. These big names often set the tone for the market, and their struggles today are a big part of why we're seeing such broad index declines. Keep an eye on these giants, as their moves can ripple through your portfolio over the long haul. Diving deeper into volume leaders, Nvidia and Amazon topped the charts for trading activity, alongside Intel and Ford. Interestingly, smaller players like Fastly saw a massive surge of over 70%, with huge volume, likely tied to specific news or speculative trading. These high-volume stocks often reflect short-term sentiment shifts, but for us long-term investors, they're a reminder to focus on underlying value rather than day-to-day noise. Now, let's shift gears to earnings, as it's a busy week with plenty of heavy hitters reporting. Companies like Cisco, which we mentioned earlier, disappointed on guidance despite a revenue beat, causing that sharp drop. On the flip side, Equinix had a solid showing, though it missed some estimates and still managed to hike its dividend. McDonald's also beat expectations with strong global comps, a positive sign for consumer spending resilience. Upcoming reports from big names like Deere & Company, Applied Materials, and Airbnb are on deck, and they could sway market sentiment in the coming days. These results give us critical insights into sector health, so as long-term investors, we're watching for trends in consumer behavior and CapEx plans. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these reports and what they mean for your investments. Zooming out to broader economic news, there's a mix of global and domestic factors at play. Inflation data is on everyone's mind, with the January CPI report expected to show a modest 2.5% year-over-year gain, which could influence Fed rate cut expectations, now pushed out to mid-2026 by many analysts. Meanwhile, AI fears are rattling tech stocks, with investors rotating into old economy names as skepticism grows around AI spending returns. Internationally, emerging markets like Latin America are seeing inflows as a hedge against U.S. risks, and Japan's aggressive fiscal stimulus raises questions about global bond allocations. For us long-term players, these macro trends remind us to diversify and stay patient through short-term noise. Over the past week, some large-cap stocks have shown incredible strength. Vertiv Holdings soared over 37%, likely riding the data center and AI infrastructure wave. CoreWeave also popped more than 22%, reflecting niche tech optimism. Ferrari and Spotify rounded out the top gainers with impressive double-digit gains. These weekly movers can hint at emerging trends, and for long-term investors, they're a cue to investigate whether these gains are backed by sustainable growth. On the flip side, weekly losers included Medpace Holdings, down over 23%, and Zillow Group, shedding around 16%. Companies like Atlassian and S&P Global also took hits of over 13%, reflecting sector-specific pressures in tech and financials. These short-term dips can be painful, but they often create entry points for us long-term thinkers if the story behind the business remains intact. Sector-wise, energy and basic materials led the pack over the past week with gains of around 1.8% each, likely buoyed by commodity strength and geopolitical optimism. Industrials also showed resilience with a modest uptick. These sectors are often cyclical, so for long-term portfolios, they can offer balance against tech-heavy exposure, especially in times like now when tech is under pressure. On the other hand, technology was the worst performer, down nearly 2%, followed by real estate and communication services, each off by over 1%. Financials and healthcare also lagged, reflecting broader market concerns around AI disruption and interest rate uncertainty. While these short-term sector moves grab headlines, remember that long-term wealth building focuses on secular growth over cyclical swings. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate the ups and downs of the market. Be sure to stay engaged with us for daily summaries, in-depth SWOT analyses, and exclusive insights to keep your investment strategy sharp. Hit that subscribe button, and we'll see you tomorrow for more market action. Take care and happy investing.